This has been 20 seconds of the statistical hell I've been living in for the last 13 weeks. And it's about to end. Yeah! Let's trade some Forex. That trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! G'day, mate. Ripper. Morning. Hello, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We love you. Blub, 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 blub. Put your diamonds in the sky. Yeah, we love you. We want you to succeed. In fact, that is the raison d'etre for me being here. So I want to teach you technical analysis, fundamental analysis, and other skills that will make you a success on the long run. So in the short run, ask questions, get involved, listen to what I tell you, and over time, you will develop skills that will help you become confident. And when you're ready to trade real money, please choose Traders Way as your Forex broker. So what can you do today to support our community and your learning? Go to TradersWay.com, open a demo account right now. You can test out the execution speed, the spreads or the costs, right? And a world-class customer service. Meanwhile, when you're in your back office at Traders Way, download MT4, come back to this video in the video description below. There's a link to download all my chart templates, all my indicators, all my profiles. It's all for you for free because I want you to be a success, and I'm doing everything I possibly can to make that happen. So without further ado, let us be going now. Open, 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 open. So, got some questions yesterday about the Euro ZAR. Boy, this light in my eyes really makes things difficult. Got some questions about the Euro ZAR. I got to move this. About sort of the general setup and all that kind of stuff. And where's my... So we have... I can't see it. I used to have a trade here. Guess I'll do it this way. Yeah, I used to have a trade here, but it's gone. I hit my profit target. There's a trade here. There's a trade here. And there's a trade here. So I hope you can see this is nothing different from what I coach every single day. Okay, lower low, lower high. Then there's a lower low, lower high, right? Lower low, lower high. And then down here, lower low, lower high. And we're just moving. And at some point, I need to move my stops, but there's no need to right now, right? Can you guys see that it's exactly what we go over every day? It's just that I had plans ahead of time. Okay? It's nothing special. This is just like, I don't know, price action. Then, of course, if you drop into this on smaller time frames, you'll see that there's pivot points. And you know, this is a monthly pivot point, right? And this is a monthly pivot point. And this is a weekly pivot point. So they're all very, 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 very standard. This is just how you're supposed to trade. But I'm letting the winners run. They're longer term positions. That's why I haven't moved my stops. Although I could. Can you see all my stops here? I could move them, but I'm collecting interest on this Euro ZAR, and it's really huge. It's really, really, really good interest. And here's our trade plan from the other day, and you can see that even this is now moving along, and we're getting closer to sort of targets, right? So I have to decide what to do. But I'll give you another example. So this is my high yield setup. So another great high yield setup is Euro Turkish Lira. And I'll clear this out. And you'll see something very similar here. I have a trade here. I have a trade here. And I have a trade here. All short, of course, right? And I'm picking up that lira yield and borrowing money for free from Europe, right? And again, combination of monthly pivot points, weekly pivot points, daily pivot points, lots and lots of price action stuff, right? Right? Lower low, lower high, sell, easy. Okay. Lower low, lower high, sell, easy. This, by the way, I think it was just a psych level. Yeah, I sold at 7.0. So that means I was sitting there waiting, right? You can see I even haven't marked it up I marked it up for myself. So what I do for you is exactly what I do for me. I marked it up for myself and I said, hey, this 7.0 might be interesting. So, on a 5-minute chart, you see a rollover. Oh, you take a shot. Then you see the lower low. Oh, take a shot. Okay. And you know what? Honestly, this trade here may not have been this. It may have been this, somewhere in here. Although I don't see an entry, so I can't remember which one I did. But anyways, whatever. It's just trading, right? Right. And this, I moved the stops on these ones because it's lira is just craziness, right? So can't lose money, can't lose money, can't lose money. Any thoughts or questions on these two? I typically don't show high yield because it's not really something an amateur should be doing, but the technical analysis is just straightforward, right? Oops. I'm going to go here. Yeah, I drilled down, Jay. Yeah. So put it this way, Jason. The book I wrote 11 years ago is called Strategic and Tactical Forex Trading. So you develop a strategy first, Jason, on like a 4-hour chart. If you prefer daily, by all means. But the thing is, you're looking at higher time frames and you're considering fundamentals and macroeconomic conditions and all this, and you say, oh, I'm a bull or a bear. Okay, so that's strategy. Then you use technical analysis on the smaller time frames to actually set up trades, whether it's a scalp, spot, swing, carry. You still have to get in the trade at the right price at the right time, and that's technical analysis. Okay. It's 7:30 in the morning here, chaotic. New York time. Does that make sense, Jason? Yeah. And who said it? Shook says 1 pip per day. It's actually more than that, but here's the thing. Like, you laugh at it, let's say. I'm not saying you are, but let's say lots of people would laugh at that just to say, oh my God, it's only 1 or 2 pips a day. Which is true because if your trade should be yielding you 100 pips a day. That is also true. But I'm trying to get you to look at Forex more as a business and maybe with a little bit of an investor's mind. That is income. So it's like, I don't want you to buy an apartment building with the only point of view that someday you'll be able to sell your apartment building for more money than you paid for it. At the same time, you should consider the income, the cash flow. So I'm suggesting the cash flow from this investment may only be 1 or 2 pips a day, or in some cases 3 or 4 pips a day. But on a relative level, it is so ridiculously high that it's almost hard to believe. But you forget that you're leveraged 100 to 1. And that's the weird thing, right? So you're like, oh, I'm making all these pips. So what I'm trying to get you to, as I build you into a professional, where's my drawing tool? Okay. As I build you into a professional, we have to keep something in mind. And I'm planting seeds, so to speak. Okay? We're planting seeds. Oops, whoa, whoa, whoa. Let's kill that. Oh, you know what? I can do it this way. Okay, let's look at your returns this way. And I'll do this manually and I'll make it blue. Okay, in the beginning, you don't have any money. And I understand that you're going to want to make money because you can't stay at 500 bucks forever or 5,000 bucks forever or 50,000 bucks forever. When you start, you should be, well, not that you should, but you most likely will be aggressive to grow your account size. I understand that. So we'll start with this being your money. Okay. And money going up. This is big money, right? Big money. And this is little money. In the beginning, you're going to be aggressive, but what I want you to do is I want you to be like this eventually. Okay? Which means risk. This is, to get the big money, you have to take risk. And in the beginning, you're going to, I should probably change colors now. In the beginning, you're going to take a lot of risk for very little reward. Did I get this backwards? Money and risk, 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 money, money, money. I might have done this backwards, right? No, wait. So what I'm trying to get at is the level of risk that you take should diminish as your account size gets bigger. I guess that makes sense. But this doesn't make sense, I don't think. Oops. Anyways, I'm screwing this up. Totally screwing this up. But anyways, what I'm trying to get at is that you should be, on the long run, risk averse. As your account size grows larger, per trade, you should risk less and less. And I'm not, is this risk and money? I guess it's, yeah, I had the axes wrong. By the way, when I go into this mode, I can't see the chat, so I'm sorry if I'm missing your chat. So we'll go back to here. It's risk on the Y, sorry. This is risk, oops. This is risk, this is money. Okay, so as your assets under management grows, okay, this is better. As your assets under management grows, your risk should fall. Okay, that's where I'm trying to get. So when you're right, so you forget at this level that that you're right, you're leveraged 100 times because you're only making $20 on a trade. You might, right, and then you might only lose $20 million or $20 on a trade. But what if it was 20 million? And most likely your behavior would change. So I'm trying to plant these seeds. Yeah, it's not the curve. It's I had the thing flipped. Okay, so I want you to always be risk averse, but even in that curve, no, if the curve is down, look, if we go it that way, there's okay, let's do this. Okay, this is risk averse, this is risk loving, and this is risk neutral. Okay, as you get more and more money, you should take less and less risk, right? This is your level of risk. So I don't know, maybe I'm still screwing it up, but just listen to me. I want you to be risk averse. Oops. I want you to be risk averse in the long run. Gee whiz, why is this not working? There we go. I want you to be risk averse, and even when you're risk averse, in the beginning, you're taking lots of risk, less risk, right? Per dollar. That's the thing. Maybe I'm not explaining it right. It's per dollar. Your per dollar risk as you get more money will diminish. Okay, so to plant that seed, even though you're only making 3 pips a day, let's say, on a high yield currency, I want you to think differently, because I'm not interested in that day, let's say. I'm trying to have you plan a business a year or more in advance. So what the other way of looking at it is you're guaranteed 1,000 pips a year. Okay? You understand? How would you like to have a guaranteed 1,000 pips a year on a trade? Well, that's how I train myself. It's not 3 pips a day. It's 1,000 pips a year guaranteed. But here's the interesting thing. What's the likelihood if you stayed in the trade a year and collected your guaranteed 1,000 pips, what's the likelihood you're going to have 1,000 pips profit? Or even 500 pips, or 5,000 pips on the trade. Oh, first 100 pip trade, right on, man. So it's a different mindset, isn't it? Okay, it's a different mindset, but that's where I'm trying to drill that into you. You do not, well, it's not just that, it's not that it's 1,000 pips, right? That it's 5, let's say if you're making 3 pips a day over a course of a year, let's say it's approximately 300% return on investment. Okay, so like if you take a mini lot, let's do this in black. If you trade mini lots and you put in 1 mini, that equals $100, right? You leveraged, right? Leveraged 100 to 1, so you're controlling 10,000 bucks. You only have 100 bucks, but you're leveraged, so now you're controlling 10,000. You invest your 10,000 and you're clearing a 3% yield on your high yield currency, which means you're going to earn $300 a year in interest. 3 pips a day, essentially. But it's actual interest, and you get paid every day, 7 days a week. Well, actually, you don't get paid Saturday and Sunday, but you get paid 3 times on Wednesday. So anyways, you get paid for 7 days a week. You don't have to wait till the end of the period. You don't have to wait to cash out, and then you get paid. It goes into your account every day. So the way I like to look at it is, if you told an investor, you say you have a strategy where the minimum you expect is to collect 300% return on investment in income. Plus, you can make significantly more in appreciation. Okay? Would they be interested if you were to explain this to a business person? You're like, I fully expect to make a huge profit on appreciation. Plus, on top of that, we will make 300% a year on the investment in income. Greg says, isn't it difficult to stay in the trade for given volatility? No, it's not difficult, Greg, because I don't do anything. It's not difficult at all. I'm very capable of doing nothing. Okay, so I will earn, like on that. Let's take the Kiwi yen. Hang on. Where am I? The ZAR. We'll do the ZAR one since you brought it up. Okay, so I'll show you how easy it is to do nothing. As long as I'm short, I'm going to earn 1,200% return on investment annually. So now you have to break it down, but I'm being paid an annual rate of 1,200%. That seems fair. So I am not going to get out of these trades. I am going to collect 1,200% a year. Guaranteed. So what I'll do probably overnight is I'll move all these stops when I'm not in the middle of a webinar. And I'll just walk away. And I'll collect that every day. And maybe I'm in for a year. Maybe I'm in for 5 years. What if I never get out? The only thing in that case is whether South Africa raises interest rates or lowers interest rates. That will affect my yield. But is it difficult to not get out of the trade? No, I can do that all day, every day. If your stop's at break even, you have no risk, Greg. Why would you get out? The only time, and I've taught you this in the past, and I put like a sub-chapter in my book about this. At some point, you do get antsy. And carry trading has this characteristic where, yes, you're collecting a high yield, but you have 10 times more money in pips. And then you're like, you can't sleep at night because you're making so much money on the pips. You're like, well, if I just get out now, I have like 10 years of yield. And then there's the time value of money thing, and you're like, I'd much rather have 10,000 pips today than 3 pips a day forever. And the time value of money thing starts to kick in, and you're like, you know what? I get it. I'm earning 1,200% a year in interest, but I'm taking my money. And you just take your money and you leave, because value of money in the future is less than the value of money in your pocket right now. Does that make sense, Gregors? All right. So just food for thought, guys. Gold! Yeah. It may not make it that far down. So as you can see, I've already highlighted it for you guys yesterday or maybe the day before. Do I have the right tool? Yeah, I guess so. Sure. It's just a hammock. But I think you're going to find support in this level. You may not make it to the central. That's all. Okay. For example, using moving averages as your dynamic level of support, you've already found support. Now we don't know if it's going to hold. This is a daily chart, but you would have to assume under current market conditions that that might hold. Okay. So now you take that and say, in fact, I'll even mark this for us. I'll mark it with a line here. Okay. Now you drop it from a daily to like an hourly. Then you say, oh, well, we're trapped in a range, right? Something like this. Whatever your range is, you can mark it any way you want. But in that scenario, if you're a bull, because the daily 5 is right where we are now, you could have a trade plan that says, well, you're a bull, so yes, you'd like to buy it here, but shouldn't there be a plan A a little bit higher? Just saying, keep one eye open. Still clocking the gold. So anyways, guys, going back to the previous thing about yield and stuff, think big. Think like a billionaire. I gave a task to the group maybe a year and a half ago. I said, think like a billionaire. And I said, if I gave you $1 billion right now and you had to create a diversified portfolio, not just Forex, but commodities and ETFs and futures and stock indices and individual stocks, maybe some real estate. Build it. If I gave you $1 billion, how would you build it? Think about it. You're going to have to think about the future too. What will the stock market do in 18 months? What will the real estate market do? What will interest rates do? All this kind of stuff. Because at that time, we thought interest rates were going to go up and up and up, probably straight to 5%. And then even the Fed just 6 months ago thought that too. And all of a sudden, they slammed the brakes at 2. So things have changed. But, you know, I'm trying to train you to think big so that you'll be prepared. Okay. Because if I don't train you to be overall risk averse now, why would you be risk averse later? So what will happen is you'll grow your trade account, grow it, blow it up. It's gone. Gone. Okay. All right. Right. Let's go. Let's start top left. And my phone is just crazy on fire. Oh, I see why. All right. It's okay. It's okay. It's okay. Okay. Swiss it. Okay. So as long as we're lower here, it's a risk-off scenario, isn't it? So if you're a bull, you're going to need to break this. So it's next week's move, right? Now, what if you're a bear? Oh, well, you should have sold this. Yeah. Because think about it. If you're a bear, what was the plan here? Well, double top is trade the double top and then trade the retracement, right? Am I right? So, man of many talents says, waiting for USD to break out to the downside. Okay, that doesn't make any sense. So by breakout, you're setting it in a consolidation, okay? And then what you're saying, and maybe you don't mean it, but I'm interpreting your language as a breakout strategy is this. Okay, that doesn't make any sense. Okay, this is a trend. So what does make sense is you should have a plan A here and a plan B here. You don't wait till lower low to trade. Okay. It's trending down over the, there's a bear, there's another thing too, like this, this, after all that, I tried that, get that black. All right. This is a bearish trade plan. So we know where the market's going if you're a bear. This is going down to M1. It's not even on the chart. Okay, if you're a bull, this is your trade plan. Okay. So anyways, if you're in the bear camp, which you just said you are, you sell lower highs. You don't sell lower lows. Okay. If you're a bear, you sell green candles, not red. You've given up probably half the profit by the time you enter your trade if you do it that way. And by the way, that was what was taught like 20 years ago, doing what you're saying. And it was the dumbest thing ever 20 years ago. And then and lots of people used to trade that way when they came to me, and they're like, oh, whoa. And so I haven't seen that strategy in a while, but But anyways, so Fader says I should do USD Swiss franc. But the problem with that is I just did that now. So there you go. Okay, so remind yourself the anchoring that I provided to you so far. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. Okay, I don't say down, 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 up, down, 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 sell, up, right? Like, no. Train yourself, train yourself. You guys are messing with each other now. Well, all right, I'll show them all. Someone requesting USD Swiss franc as I'm doing USD Swiss franc, and then Alex says USD Swiss franc, but I think Alex is bugging Fader and whatever. Okay. So yeah, so if you're a bull, this is very clear, straightforward what to do. Okay. Remember, if you don't know what to do, it's because you didn't have a plan. And coming up with a plan now for today is dumb. Amateur hour. Okay. I'm already thinking next week. So like what you're trying to figure out what to do today. Whoa, dude, you're going to get crushed. Okay. So if you're a bull, you're definitely setting this up. Okay. And you're going to be challenged, and you already know this, you're going to be challenged here most likely. If the market remains crazy bearish, they're going to sell it right now, but there's already signs that that ain't going to happen. So most likely this is what's going to happen if you're a bear. Okay? Most likely. Unless it drops right here, right now, but that doesn't seem likely. It could happen though, for sure. New York Open and all that kind of stuff. Fine. Perfectly acceptable. But this will be more interesting. Okay? Because it's simply a follow through on a bearish trade plan. And all of this started 2 weeks ago. So like to try to figure out, like if you're I won't say you. Let's say an amateur logs into their charts and they're like, I wonder what's going to happen today. And they're trying to figure out what to do over the course using data from those 8 hours. And they have no idea that the market's set up for a bullish trade plan 2 weeks ago. Okay, you understand? Like, so those that lose money are stuck in here. And they're like, what should we do today? I wonder what New York's going to do. I wonder what the news is going to do. And they're just logging in and they have no idea what's going on at all. And then they're going to try to figure it out. They're going to try to figure it out, right? How many people are willing to admit they used to live in that area, that 4-hour territory of what's happened over let's say the last 8 hours or less? How many people admit that that's where they used to gather their intelligence and formulate a strategy? Anybody? RJ Nabisco? J-Dog? Yeah. AP Newswire? Fader? Oh, Fader, no. Wow, Fader's rolling in with advice for people, and he's an awesome trader. All right, dude. Yeah, monthly. All right, Fader's got it. All right. So to be clear, though, we don't know if it's actually going to fall here because there's probably a 50-50 chance at this point that this goes up now. Now, it's not going to go straight up because we're going to be challenged here, and we're going to be challenged here, and we're going to be challenged here, and we already know that because we call that resistance. But if you're a bull, you're going for the M4 or higher, right? So these are plans, but the thing is, what I'm trying to say is, if you're a bull, you were a bull 2.5 weeks ago, and your plan was to buy here, okay? This is why these other guys in the yellow zone there lose, They can't even comprehend that 2 weeks ago someone said, I'm going to take my profits off the table. I'm going to spend 2 weeks in the Caribbean with my mistress. Then I'm going to come back and I'm going to buy it back here. And someone else is logging in like, I wonder what's going to happen today. Oh, boy. Right? Oh, boy. Oh, boy, it's going to get exciting. So we just don't know who's in control, but you not only do you have hours to prepare or days to prepare, you have weeks to prepare. So a bull probably already bought it, actually, to be frank. And a bear is already getting ready to sell it. We just don't know who's going to win. But if you're a bull, you know where to buy. If you're a bear, you know where to sell. And everyone else loses money. You understand like how attractive this would be if you were looking for a reason to buy it at that price, and now you see a double bottom? That's sexy, isn't it? Isn't that hot? That's sexy. That's so sexy, right? And now what? They bought one here, and guess what? What day is it? Thursday? Between now and Monday, they're going to buy it there. If you can't see it Thursday, you're not going to trade it Monday. That's my new t-shirt. If you can't see it Thursday, you ain't going to trade it Monday. So I'm already on Monday now. I might take it today. I might take it tomorrow. I might take it Sunday. I might take it Monday. But that is the plan, Stan. And other people are logging in. They're like, oh, in this period of time, I wonder what I should do, right? In this period of time, I wonder what I should do. In this period of time, I wonder what I should do. In this period of time, I wonder what I should do. Okay? Yeah, sure, trade. I've never had instincts for the market. So, anyways, I've never had instincts, so I've had to rely on analysis. Okay. All right, cool. Yeah. I know someday you will have a beautiful... All right. No. I mean, we've done all of this. Do we need to do... Okay, nothing going on here. Okay. Unless you're a bear. I mean, you can see there's 3 bearish trades, right? But, so 3 days in a row, you should have been a seller if you were a bear. But let's change our analysis. Okay. You should be out. The money has been made. So here's the interesting thing to combine this analysis. A monthly bullish swing. Oops, let's go black here. A monthly bullish swing was here. And you're like, well, you couldn't have got on it because it moved so fast. Oh, I know. You were supposed to buy it before it. Right? So now what? Well, if you were a bear, maybe because you noticed that we're done. So this red zone here means you should walk away. The trade is over, which happened very quick. That's fine. But then you say, you know, if it heads back in, you're going to be a bear. Now, this is getting more complicated, but it could be done. So at this point, you go from to a bear. And as I just showed you, I think this was a daily sell. 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 So you could just, you know, sell here, move your stop, right? Sell here, put your stop. sell here, put your stop. And then once it makes a lower low, you move the stop, move the stop, move the stop, take a walk away, whatever. I don't think you would do that, nor would I typically recommend it, but it can be done. You just have to have different strategies, different time frames, long-term long, but short-term short kind of stuff. Okay. And then we could look at it from a much bigger point of view, which I like to start with. This one. Okay. And this one gives me imperfect information. I don't quite know where it's going to go. It's not a perfect entry. But if you believe that this was outliers, then your general strategy as a bull is it's like it's working, but there's something quirky about this. This is the price action is okay, but like, okay, so did this respect the pivot? Did this respect the pivot? It's like, did this respect this? Like they're hitting them, but they're very loose. So it's hard for me to feel confident. But if you're just to use price action, which is a wonderful thing to be using, okay, this is, let me use this tool. Okay, this is the support and resistance. Okay, I guess you can try to capture this other one. Okay, but I don't know. It's very imperfect. It gives me pause. I don't give it as much confidence. Okay, it's okay, but it's not perfect. Okay, whatever happened here before, right? It's definitely not bearish, except, okay, that's a monthly basis, right? So we should be going on our way to monthly M4, which is way above us. But daily, here's the interesting thing. Daily, this was a sell, this was a sell, this was a sell. Okay. Now you should probably expect on a higher time frame like monthly. Let's give it a little goose here. That this is supportive. Okay. So someone that shorted, let's say Monday, Tuesday, and Wednesday might find, we don't know, might find Thursday, Friday up. And that's why you have to have the higher time frame. You're like, hey man, this was bearish 3 days in a row. Yeah, absolutely. Good job. Now it's going to go up for 2 weeks. Maybe, right? But that's what the planning would say. And where is it going to go? got. What do you think? Do I get a like yet? Did I earn the like of the day? Huh? Anybody learned something? Anything? Doesn't matter the pair, but it's gold. It's gold, but it doesn't matter. It could be anything. It could be dog food. Yeah. By dog food, I mean corn. By corn, I mean maize. Huh? Come on, share some love. I'm an only child. Come on, shower me with love, please. This is so much more fun than doing statistics or microeconomics. In the next 24 hours, I will be officially done my first degree. In 24 hours, I will be officially done my first degree. I'm half done my second degree. But I will be done one, on my way There's going to be a cap and gown ceremony. I'm going to hang out with Angela Merkel, with my daughter and my son and my mom and my dad. I'm going to get a nice gold ring that says, F you, I'm a Harvard asshole, right? It's going to go right here. It's going to say right there, Harvard asshole. On the one side, it'll say Wall Street, and the other says, F you. So anyways, that's good, right? Actually, that'd be fun. I should have the big Harvard H on one side of my shirt, and on the other it just says Wall Street asshole. Yet another banker, right? Oh, is that right, Mac? So you know what I'm going through. Wrap that up. Peter Ward knows what I'm going through. He wrapped his up. Now he's going to go collapse by a swimming pool for 3 weeks and sleep and get a sunburn. I don't know, Chris. I don't know. I'm literally on the razor's edge. If the wind blows the wrong way, I'm out. Unfortunately. And the reason I'm on razor's edge is I signed up for a ridiculously advanced class in macroeconomics taught by the professor actually was a senior or is a senior economist at the Federal Reserve. I'm like, I got to take this advanced macro. I love macro. I have to have a professor that works at the Fed, all that. So I've had like 2 professors and 3 classes with people that actually work at the Fed, right? So I'm like, I got to do this. I got to do this. I got to do this. I had to get permission from my school's dean. So I had to get dean level permission, all this kind of stuff. I had to write up a letter, this whole thing, right? And I took the class, and it was ridiculously good and ridiculously hard. And because of that, my GPA dropped exponentially. And so now I'm literally in the last 24 hours, and I don't know if I'll graduate on the dean's list or not. I don't know. I am right now. As of right now, I am. But that could just go away in a bat of her eyes, a flip of her hair, and I'm out. But such is life. Yeah, this is a drawing tool. I use multiple drawing tools. This is called Epic Pen. But if you want zigzags, for example, because I don't know, you're an Elliott Wave dude, you can go Insert, Indicators, Custom, Zigzag. And oh, they're so thin I can't even see it. It's so funny, these default settings on indicators. Programmers just don't get it. All right, so duration, depth. I guess I have to do it somewhere else. I saw it. It's right there. Oh, you know what? I can do it this way. Indicator list, zigzag. I still can't do it this way. Colors, maybe? Yeah, here we go. Boop, 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 boom. Boom, boom. So you can zigzag it that way. Now, I like to change the zigzags, and I haven't done this in a long time, in years maybe, but depth or duration. Let's go 55. There we go. Okay, and that helps me, especially if you get rid of moving averages. So why don't we do that too? And we'll just look at price action. I don't need Bolly bands. Let's get rid of bands. All right, so we have price action and pivot points. So maybe this zigzag helps you. So you say to yourself, oh, this must be a top. Okay. This must be a lower low than these things, right? In this case, you would have sold here. Oh, well, it didn't work out that way. Okay. Back higher high, so, you know, you're going to higher high, so you're going to here, right? You're trying to connect these things. Well, Fader, it's an exaggeration to say that it counts waves. But if you're counting waves, you could use zigzag. A to B is not to B to A. Okay, it's just looking at higher highs and lower lows is all it's doing. All right. Come on, come on, come on now. Trade me, baby. Can't you see that I am not afraid? All right, so let's do some requests. What would you like me to do? Building permits, Brooke, shouldn't be a big deal. No, Gym Addict, it's not on your computer. You have to buy it. That's the wonderful thing about money. It gives you whatever you want or need. So you just go buy it. Epic Pen. Uh, 55, Jason, is what I put them on. I like to use fib numbers. Yeah, okay, yen pairs. Yeah, that makes sense. Now trade me, baby. Can't you see I'm not afraid? Euros are. We already did that, bruh. I showed, what, 3-4 trades that I'm on for Euros are. It was the first thing I covered. Watch the recording, huh? All right, Beast. Okay, Beast is on the beware. Notice we're still caught here. So bulls should start looking for scenarios, right? So let's take a look at this. Delete. If you're a bull, you're going to assume support here. So next week you're going to be long. Oops. Next week you're going to be long here, right? And then let's identify the resistance. So let's do it this way. So that'll get you to about there. Maybe not quite. Let's do it like this. Okay. So next week's trade plan will be buy it here and get out about there. Okay. Okay. So on Monday we did the moot. I explained the moot trade, which was sell here. Okay. You could also have taken it and done another one here. Right? Pretty straightforward stuff. You can do like, okay. The problem is like, even in the green zone, I go ultra conservative. But pivot roll reversal is very tradable. Okay. So like if you're missing things like this, you need to take the swing trade, the price action course. If you're missing this, you're missing a big part of trading. Okay. Yes, being down here should make you ultra cautious. Yes, you could have seen this and said, I see it, but I'm going to ignore it. That's perfectly, well, that's probably the right thing to do. But based on the mood trade discussion we had on Monday, this is doing what it's supposed to do, right? Right? I think on Monday I said never, ever, 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 ever buy this. Okay? Until it reverses. So next week, if it does this, yeah, you can be long here. Okay? And I would start thinking not only next week's pivots, but I know it's very early, but I'd even start considering next month's pivots. Okay? Okay? What was that profit that you made? Ooh, a little Arctic turtle on this one. All right, well, it's still doing what it's supposed to be doing. So the next one's probably going to be like this, maybe. Going to need a stock market rally. Ooh. Okay. Notice we're through, again, this area here. It just brings massive caution. Remember, I told you all of this is risk. Massive risk. So now you're seeing that why you should be conservative, right? But is that you want to trade the new stuff? All right, fine. I get it. That makes sense.
Expected 1.67 million, most Canadian data manufacturing sales expected 1.5%, as well as international securities transactions for March, and Canada ADP payrolls. Data in just a few seconds. $1.24 million for housing starts, $1.24 million above the $1.21 million expected, prior buy slightly higher, permits $1.30 million, above $1.29 million expected, prior buys higher, claims of 212,000 below the 220,000, continuing claims 1.66 million versus 1.67 million expectation, prior buys slightly higher in the continuing claims. Canada manufacturing sales 2.1% is above the 1.5% for March expectation. Securities transactions minus 1.5 billion in Canada versus 12.4 billion prior.
Now, why would you buy the pound and sell the US dollar? What do you think of that? You know, the most interesting thing about this whole entire chart is this. It happened at exactly when you would expect it to happen. Of course, you could have been a bull too. But either way, you had trades right when you expected. And yeah, whatever. Okay. And by the way, you're supposed to get out here, right? This is where you're supposed to take profit. And then I tell you that, like, there's a law of averages and stuff. I wonder if we can insert channels from about here. I'm going to say from like the point we hit that, if you got out there, even then it's above average. See what I'm trying to say? So what I teach is if you sell here, you're supposed to take your profit here. Now you would have missed all this volatility, okay? And this regression channel essentially is looking at the covariances, right? And if you take the covariance of price and time, I don't need to go into the math, but what it's looking at is if you square root this, you get a standard deviation. And essentially what I'm trying to express is that it went down some, then it went up some, then it went down some, then it went up some, then it went down some, and now it's up some, and eventually it's going to probably come down some. But if you looked at the amount of risk associated with this, just even staying in it, right? Right? Like, you don't have to do the calculus of it, but square rooting the covariance of price and time gives you a standard deviation. Plus, there's sort of, to add to that, some sort of risk of ruin. Like you're going to, you potentially could make, there's two things that can go here. You can stay and you're risking giving up profit for making up profit, for making profit, right? Or you could sell here and lose money, buy here and lose money, sell here and lose money, but and potentially run into disaster, right? Which is a more of a risk of ruin type thing. And ultimately, if you had just simply done what I told you to take profit here, you would be above average when adjusted for risk. Okay, you have a higher risk adjusted return. Okay, because you didn't face any of this risk of possibly losing lots of money, nor did you stay in to possibly make a little bit more money. You simply got out, walked away, and then, of course, to add, to put icing on the cake, again, if you did your job correctly, not only did you walk away with higher risk-adjusted returns, you went and found something else to do with your time and got on another good trade and made money there. Does that make sense? Okay. So if you've read the book from 11 years ago, I said if you sell here, you always, 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 always get out at S2. Why? Higher risk-adjusted returns, lower risk of ruin, and you probably go find a better trade to be on than stare at this for 2 weeks. And that's why I teach it. Cool. And also, something to mention, I almost counter-trended these when we were here. And I didn't. I'm glad I didn't. But look at the wonderful trades as a bear. Double top, lower low, right? Drag it across. New sell zone. Sell, right? New lower low. Drag it across. New sell zone. Okay, new lower low. Sell zone. Okay, just beautiful. At some point, though, you notice, like, how much did it move? Versus how much did it move? Versus how much did it move? You see it's getting smaller? There's a lesson in that. There's a warning in that, really. So you get like this, then you get this, and then you get this. Okay. I want you to ask yourself what's happening. You know what? I didn't measure that fairly. Let me do these again, because I measured the first one from the top, not from the break. So yeah, that makes more sense. Okay, it was this one. And then this one, actually the fair one is this. All right, so okay, so what's happening here? Is there something that I should pay attention to? You know what, let me move this down so they're out of the way. What's happening to the market? It's becoming more cautious. Okay, you see that? So we're becoming more and more vulnerable to a reversal. So at some point, if I want to be a bull, I mean, for whatever reason, I decided to be more conservative here than in other situations. Okay, but nonetheless, you always need a reversal pattern at support before you reverse. And typically this is support. Well, right now we're on whatever that is. I don't even know what that is. What is that? M0 or something. But a higher high, higher low could be very interesting next week. Don't you think? So yes, I am already thinking next week on this. Okay. Once again, and I'm going to end this way. If you're not planning, right, if you can't see it on Thursday, you're not going to trade it Monday. And therefore, you're not going to be a success. So start planning. Remember, they're plans. They're not actions yet. But if you were a bull and you thought it would reverse, what kind of pattern would you see here if you believe this is support? And if it is support, what pattern will you see? And how does that fit into your trade plan for next week? Oh, well, in that case, if I saw, oops, let me go black here. If I saw a double bottom here, I'm going to consider that support and a higher high. Then I want to buy a higher low, 1, 2, 3 reversal somewhere between next week's central pivot point and M2. So I'll be long and strong with my stop down below the monthly M0, and I'm a hero. Done. Okay? And I'll probably get that between now and Sunday afternoon. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a client of Trader's Way. Thank you for subscribing to Forex.Today. There's another 4,000 videos on YouTube. Feel free to watch every single one of them. Like and subscribe and comment as you go. If you want to download my chart templates, they're absolutely free in the video description below. Thank you for all the effort you put into becoming a successful Forex trader. And I'm here for you every day. Thank you for being on my team, and thank you for the loyalty and respect you show me every day.